The last learning objective we're going to look at today is learning objective number 6, which is qualitative characteristics of accounting information. So these are really important characteristics because these provide guidance on the nature of the information that we include in financial statements, which ensures that the accounting information is useful. And what is the sole reason we have for accounting information? It is to make decisions. So the information that is included in financial statements needs to be useful. If it's not useful, it's worth nothing to us and there's no point putting it together. So these qualitative characteristics provide guidance to help us produce more useful information that is useful for decision making, because as I just said, that is the essential reason why we have accounting information, to make decisions and have useful information to make those decisions. Okay, so let's have a look at these qualitative characteristics and understand the different ones. Okay, so these are the ones we have here, and you can read these in more detail in your textbook, but I'll go through them briefly now to give you a brief overview of what they mean. Understandability means exactly as the name suggests. The financial information that we include in financial reports, like the income statement, the balance sheet, is understandable. People can understand it that use it. So have some basic accounting knowledge, should be able to understand it. So once you've done a few weeks of this subject and you pick up a financial statement and you cannot understand what information is there, it means two things. One, that you need to work a bit harder, or two, that statement fails the understandability characteristic. Okay, so it should be understandable to anyone with a basic accounting knowledge. Is the information included relevant? Okay, the information should be relevant for decision making. Okay, reliable. Is it reliable? Is it correct? Is it free from error? Is it comparable? And is it consistent? These are two different things. Comparability relates to comparing different organizations. Can we compare the financial statements of our organization with that of the competition so we can get a meaningful understanding of the relative financial performance? Is the information consistent over time? This is internal within business. Do we follow the same accounting standards, policies, so the information is comparable over time within that business? Okay, there is choice in accounting. It is possible to arrive at different accounting numbers to generate different profits. And this is an issue we'll talk more about in the coming weeks. So businesses should be using consistent accounting policies to generate comparable information. So it is useful for comparison and decision making about the performance and position of that business. Materiality is information that is material to our decision-making process included. Do we include all items people should know about? Do we make sure that we don't leave anything out that is important to the overall business performance and position? Okay, so some businesses, for example, if I go back to my tape dispenser, will immediately expense an asset like this and include it as part of the expenses in the income statement because they only paid $5 for it. It really has an immaterial effect on the overall financial standing of the organization, so they immediately expense it and get rid of it out of the financial assets of the business. Right? Now, obviously, if the asset was worth $10,000, say for a photocopier or a large printer, then of course that would be a material asset which they wouldn't expense and they would include as part of the asset section of the balance sheet. So materiality drives the treatment and how certain transactions should be treated. Conservatism. We need to make sure we don't mislead people. We need to make sure we don't have, for example, an over-optimistic portrayal of the asset position of our business. Right? If there are uncertainties around the degree of assets we have, we should go with a lower number. If there's uncertainties about the degree of revenue we feel we have generated, then we need to go with the lower number. That's what conservatism means. I know some of you are probably wondering, well, how do we go with a lower number? Isn't it just one number? As I said, there is discretion in the accounting information we can report, and that is a concept that we'll talk more about in the coming weeks. Okay, so the conceptual framework is basically the grammar, the punctuation, the spelling, the sentence structure of the financial accounting language. So it's the rules of the road. It's what governs the nature of the information you see in financial statements. Right? So just like the rules of the road, you have to drive on the left, you have to stop at stop signs, etc. You need to follow the conceptual framework in accounting when preparing that information to essentially make sure that is useful information that can be used by people that want to make decisions about a business.